If you haven't started your investing journey in the stock market, this video is for you. In this video, I'm going to talk about how I would invest, how not that you should invest, but at least a takeaway that you can take from this video on how to get started investing in the stock market with little to less than $500. Hi, my name is Ali Mauvais, and I'm started this journey back in November 13th, 2025. And on this journey, I'm recording myself just basically buying fractional shares every single day in the stock market. Now, what are fractional shares? Fractional shares is if you can't buy the whole share for the full value, you can buy a fraction. So for example, right here, Bank of America is worth $48.21. If I don't have the whole $48.21 to buy one share, I can buy a fraction of the share. Minimum cost is $1. So what I've been doing every week is buying fractional shares for $1 since I started. Now, what's the point of all that? Why do I not just buy a bunch of stocks all at one time? I'm a firm believer that if you buy stocks consistently and you do that for a period of time, that you may have a better result than the person who just buys just a bunch of stocks all at one time and doesn't repeat the process. The most important thing of this whole entire journey is repeating the process. Not just doing the process one time, but repeating the process multiple times. Now, if this is your first time watching this video, you'd be like, well, you're saying how to invest with less than $500, but I have $5,000 in the account. And if you watched my video yesterday, I didn't have $5,000 in the account. Now, I'm still going to talk about how to invest less than $500, but for now as well, I'm going to teach or explain if you have more than $500. Right now, what I'm going to do is I'm going to go ahead and buy the stocks that I'm down on. And then I did buy, there is a new add-on to the stocks that I'm holding. I just bought 100 shares of a company called Intel. SPY is down. I get some lows. Buy some lows. So my game when I do all this is buying on red days. Buying stocks on red days that, especially if it's lower than my average cost, definitely gonna buy. I might buy here on some Coca-Cola. I don't know. We're down on Coca-Cola. It's gonna raise my average cost tremendously. Or I could just wait. We're down really big right now. So I'll buy into Coca-Cola, even though I don't really want to, but I'll buy. I don't expect my average cost to go up that much. So we got some more Coca-Cola. So when we're buying on these red days, my theory is if there's 252 trading days in a year, and I buy stocks on red days, and let's say there's 52 red days and 200 green days, in theory, I should be up. So not just red days, but if the average cost is lower than where the actual cost is, I'm also going to get into the stock. Like, that's a no-brainer. So we're going to add some silver mining here. We're going to add $1 to them. Add $1, make you holla. And then we're going to get some, I think it was copper. We're going to add some copper into here. Yep. We're going to add some copper, and I'm going to go over the last play. This play is for people who have more than $5,000 to invest. And when I say more than 5,000, I mean like 5,000 comfortable that you can invest in. You're not gonna need to withdraw anytime soon, right? So if this is your last $5,000, I wouldn't do it. But if you have disposable $5,000, this is one strategy that can be used in your investing journey. So right now, like I mentioned, I bought 100 shares of Intel last night, 8 hours ago. So I bought 100 shares of Intel, and right now we're currently up on Intel. Our average cost is 46.65. What I'm going to do now is called a covered call. I'm going to do a covered call on Intel. Now, I'm gonna do it and I'm gonna explain as I go. But the most important thing in this strategy is when you have to have number one 100 shares. You can't have anything less. And for each strategy, it has to be equivalent of 100 shares. So if you have 100, 200, 300, 400, you can keep doing the strategy. But if it's less than 100 apiece, you can't do the strategy. So the strategy is called a covered call. And this strategy, I like it to do it when the underlying stock is up. My average cost is 46.65. Keep that in mind. 46.65 is my average cost. So now I'm gonna go to the chain option, option chain option, and I'm gonna look for my average cost, which is 46.65, and I'm gonna look here if like these break even price. What they mean is if I get sold, for example, what a covered call is, I'm selecting a strike price here, and each strike price comes with a premium. So for example, let's say I pick the 52. This 52 expires in 2 days, and what happens is I'm putting up my 100 shares for sale if the stock, the underlying stock, is at 52 or higher at the end of Friday. For doing so, they would give me a $15 credit. If the underlying stock does not hit $52, I get to keep my 100 shares and I get to keep the $15. It's sort of like making residual rent money. But I don't like to present it like that because people get caught up in a different mindset when they think about it like that. So that's the goal. That's, you put your shares up, you get a credit. If the underlying goes up to 52, I remember I bought it for 46, so I'd make about like 500-600 bucks plus the $15 that they gave me. If the underlying stock, let's say, just goes up to 51, I would still have the appreciation of the underlying stock and I would still keep the $15. Now, in this strategy, what I like to do is because I'm up, I like to protect what I'm up, right? So right now, my average cost is 46.65. Let's say I got this $45 strike price. I would get $3.65. So I'd get $365. If Intel is above $45 at the end of Friday, I'm obligated to sell my shares at $45. But for doing so, I got a $365 credit. So what does that mean? Realistically, I sold the stock at $48.75. I got it for $46.65. So that's about a $200 gain. Now, on the back side of this is, let's say Intel drops to $45, $44. I get to keep my shares and I get to keep the $300. Essentially, this $300 would be my gain. I wouldn't lose the gains because the gains right here are valued in the contracts. So I wouldn't necessarily lose my gains or appreciation. Like right now, I'm up $188. Let's say Intel goes down to $45, $44.50. That way I don't get excited. I would have more because my average cost is 46. If it drops to 44 and I get $3 credit, $300 credit, realistically I'm still up. So that's the contract I'm actually going to go for right now is the 45. I'll go for the 45. Let's see if I can get 365 out of them. Perfect. So I got 365 out of them. So I got a $365 credit. So what does that mean? What does that mean, ladies and gentlemen? That means at the end of Friday, and sometimes it doesn't even have to be Friday. Sometimes you can get early assignment. So let's say today being Wednesday, Intel rips. Intel shoots to like $60. there could be a high possibility that I get assigned, meaning that someone exercises their contract to buy the 100 shares that I have in the underlying, which means I would get assigned. And if that's the case, that's fine because again, I got $365 in credit. If I sell it at 45, if I'm obligated to sell at 45, 45 plus 365 is 4865. 4865 minus 4665 is 2. 2 times 100 is 200. So that's a quick 200. That's a quick 200 whether the stock goes up or down. If the stock goes up, cool. Sold, made money, right? If the stock goes up, I mean, cool, I made money. If the stock goes down, I protected my profits that I made, right? I made 179. I'm up 180. Let's say it goes down to 46. Let's say 46. I think right here I actually show you. Simulate my returns. Perfect. I love Robinhood for this. This is what I'm saying. Like, you should definitely get a Robinhood account. So I'm going to show you guys here real quick. Let's say price goes to 46. Price goes to 46, right? If price goes to 46, if price goes to 46, oh, it's not 46. That's why I'm like, what's going on? So if price goes to 46, this is what the contract would be worth at the end of expiration. I would get $260, $265 of premium. So it goes to 46, 46.65 is, let's do 46.65, my actual average cost, 46.65. If it goes to 46.65, the day of expiration, I can close out the contract, buy the contract back, and I would be up $200. But my original cost is 46.65. So how did I make $200? The gain is in the premiums. So if it goes down, my gains got protected from the premiums. This is level 2. This is really level 3, like trading. But the options on Robinhood is level 2. But like the understanding is level 3 trading. So if it goes down to $46, as you can see, what my contract would be worth, it would be worth, I'd be up $200. But if the underlying stocks goes to your original price, I lose appreciation, but I gain it back on the contract side. So like right now, my contract is worth $5, meaning that I'm up $5 on it. I'm up 15. So Intel can drop right now. The more that, like right now, this is Intel. So Intel can drop. Intel can keep dropping. But right here, I'm protecting my profits. So that's the covered call, ladies and gentlemen. The account now, as you can see, is at 5,000. But that is not the importance of that because we're still buying fractional shares at the end of the day. We have money in the account. We didn't use it all. Yes, we have 100 shares of a stock. That's not the ideal goal, but there's a strategy behind it. The strategy behind it is, hey, listen, I'm okay whether I get assigned or don't get assigned. If Intel drops to $40 tomorrow, I'm okay with that. Genuinely, honestly, I'll be okay with that. So these are some of the risks that you got to I think about when doing the strategies. I'm not just blindly going into a stock because there's money in my account and I just have the urge to buy. So ladies and gentlemen, I'll leave you guys with that. Today is March 11th, 2026. Today's Wednesday. We got 2 more days of the week, baby. I'm actually getting accustomed to this hour being ahead now. So try to get accustomed to that. And yeah, if you guys aren't following me on my social medias, go ahead and follow me on TikTok and Instagram at Strictly Financial. And we'll talk tomorrow. And I want to see how these things play out. I want to see how it plays out on Friday. So we definitely talk tomorrow and we definitely talk on Friday, guys. See you later.